I call this meeting to order, the joint meeting of the Standing Committee on Finance and the Standing Committee on Industry, Science and Technology, dealing with credit card interchange fees and the debit payment system in Canada. Before we get to the witnesses, the Chair, the Honourable Michael Chong, has a statement for the Industry Committee members that he just wishes to inform them of something.
Just a point of information for members of the Industry Committee that since we did not have a chance to review the main estimates for industry, I just wanted to let them know that they will be deemed reported automatically tomorrow to the House.
Okay. Thank you, Mr. Chong. Mr. Chairman. This is the fourth joint meeting we're having on this issue. We started with the merchants. We next went to the credit card companies. We had the payment processors here on Tuesday, and now we're dealing with the card issuers part of the four-party credit card model. We have a number of witnesses here with us today. We have, I'll just read the organizations for information's sake. We have, first of all, the Credit Union Central of Canada. We have, secondly, the Canadian Bankers Association, and we have individual banks. We have the Canadian Imperial Bank of Commerce, BMO Financial Group, TD Canada Trust, and Scotiabank, and finally RBC Royal Bank. My understanding is we will have an opening presentation, a brief presentation from the Credit Union Central of Canada, and then the Canadian Bankers Association will be speaking for, I believe, most of the banks, but my understanding is RBC Royal Bank will have a short addition to the presentation by the Canadian Bankers Association. So we will start with the Credit Union Central of Canada, if we can have a presentation between 5 to 10 minutes long, and then we'll go to Canadian Bankers Association.
Mr. Chair, ladies and gentlemen of the committee, thank you for the opportunity to speak to you today. My name is Brigitte Goulard. I am the Vice President of Policy with the Credit Union Central of Canada. I would like to introduce you to my colleague, Mr. Douglas Whalen, Director of Payments. Before addressing the issue, allow me to begin by making a few preliminary remarks regarding the role of Canadian Central and more generally the credit union system in Canada. Canadian Central is a federally regulated financial institution that operates as a national trade association and finance facilities for its owners, the provincial credit union centrals, and through them for approximately 440 credit unions across Canada. With over 1,700 branches serving more than 5 million members, over 24,000 employees, and holding more than $114 billion in assets, credit unions represent an important component of the Canadian economy. Although the global economic downturn experienced since the later half of 2008 continues to present challenges for credit unions and their members, we are pleased to report that our performance for 2008 will go on record as one of the most successful years ever for the Canadian credit union system. Our financial position remains strong, and we have maintained our share of the market in step with growth in the Canadian population. Credit unions in Canada come in all shapes and sizes and operate in almost every community. Actually, in more than 300 communities in Canada, the only financial institution in town is a credit union. Credit unions are the first choice of a significant percentage of the population. In fact, 1 in 3 Canadians are members of credit unions and Caisse Populaire. We believe these numbers reflect the strong cooperative values of the system and the commitment of the system to the economic development of their communities. Charitable donations, employee participation in worthwhile causes, and scholarship and bursaries are all part of the contribution that Canadian credit unions make every day, and in fact, in 2007, Canadian credit unions' community involvement reached $35.8 million. Let us now turn to the issue which brings us here before you today, credit card interchange fees and the debit payment system in Canada. I will now turn to my colleague Douglas Whalen to speak to that issue.
Canada's credit unions provide their members with access to a broad range of consumer card services, including both debit cards and credit cards. While credit unions offer one of Canada's largest networks of proprietary ATMs, they are not significant providers of services to merchants for acquiring debit or credit transactions. Visa products are offered by some credit unions and MasterCard by others, and approximately 600,000 credit union members have obtained a credit card through their association with a credit union. Credit unions use a variety of different business models to provide credit card services to members, and each credit union makes its own decision regarding which card products and services they will offer, how they will deliver them, and which suppliers they will use based on what best fits their business situation and the needs of their members. For example, one credit union issues credit cards directly to their members and maintains control of the service relationship with the member, the terms and conditions of the card service, design of the card, marketing, pricing, fees, interest rates, and ownership of the card balances. Only the back office processing is outsourced to a third party. Most credit unions, however, have completely outsourced their credit card services to a third-party financial institution. In this situation, it is the third party that issues the card, manages the customer relationship, sets the terms and conditions of the card service, controls card design, marketing, pricing, fees, and interest rates, and owns the card balances. In regard to debit card services, Canadian credit unions have issued approximately 3.5 million proprietary debit cards and are members of several ATM and debit payments networks. Credit unions affiliated with Canadian Central have access to AccuLink, the national credit union system's proprietary network of over 1,700 surcharge-free ATMs across Canada. Credit unions in British Columbia and the Atlantic provinces and many in Ontario are also members of the Exchange, a national network that includes credit unions and other financial institutions, and provides surcharge-free access to more than 2,000 ATMs across Canada. Credit unions have access to Interact membership and services through the group memberships provided by Canadian Central or Central One, or through a direct membership with Interact. Credit unions also have access to international ATM and debit service networks through MasterCard, Cirrus, Maestro, and Visa Plus. It is important to note that each credit union individually determines which of these debit services they will provide to their members, at what pricing, and puts in place the service delivery models and appropriate supplier relationships that best fit the needs of the credit union and its members. This individuality is both a reflection and reminder that credit unions are locally based organizations delivering services that match the unique and diverse needs of the communities they serve. To continue meeting these needs, Canada's credit unions need access to the broadest possible range of products, suppliers, and delivery models for debit and credit card services. This kind of flexibility is consistent with an open market environment that provides competitive choice for credit unions and for their members. It also includes support for ensuring that a strong, domestically focused payments delivery channel, as provided by Interact, is preserved. This should include allowing Interact to restructure its governance model to gain access to the capital and revenue generation tools needed to support development and implementation of new products and services, and a review of the regulatory and compliance environment to ensure that it provides a level playing field for all payment services. As locally based organizations, credit unions respond to the unique needs of the communities they serve. Nationally, the tremendous success of Interact shows that it is similarly well positioned to respond to the unique needs of Canadians. And as the card services market is transformed by the introduction of chip and other new technologies, the capability of Interact to develop and deliver new services focused on the needs of Canadians and the characteristics of the Canadian market will be of critical strategic value to Canada's credit unions in preserving their ability to remain competitive and continue meeting the needs of credit union members. We wish to thank you once more for the opportunity to address you today. Ms. Goulard and I would be pleased to answer your questions.
Thank you very much for your presentation. We'll now go to the Canadian Bankers Association.
Thank you very much, Mr. Chair. Je suis heureuse d'être ici et je suis accompagnée de mon collègue, M. Terry Campbell, qui est vice-président politique à l'Association des banquiers canadiens. Also pleased that there are 5 individual bank representatives who have made themselves available here at very short notice, and they will obviously be pleased to answer your questions as well. Et nous avons aussi préparé un mémoire.
Also prepared a brief for you. I hope you have it. It contains information on the issues we'll be discussing this afternoon. We have met with a number of members of Parliament including a number of those around the table here, and we appeared before the Senate Committee on Banking to discuss the same issues as those you are studying. I've also spoken with the President of the Retail Council of Canada and the Canadian Federation of Independent Business. We have heard the range of concerns that have been raised.
Thoughts and suggestions on issues from the perspective of institutions which issue credit cards. There are a range of matters, and I would include there as examples the setting of interchange fees, the specific terms of merchant-acquirer contracts, which the banking industry does not control, and where we are therefore not able to provide specific detailed commentary. And it's also important to remember that in a competitive marketplace where individual institutions are actively competing for customer business, information regarding bank operations and business strategies is highly confidential and proprietary in nature. It is information that banks do not share amongst themselves or with the CBA to ensure that we're in full compliance with the Competition Act. Now, that said, we're certainly very happy to have this discussion today to answer any questions we can to the best of our ability. So with this in mind, I'd like to turn to our submission. As you'll see at the beginning, we've outlined the many benefits of credit cards for both consumers and retailers, including choice and competition in the marketplace. And I think that unfortunately many of these benefits have been overlooked in the recent public commentary. We also need to keep in mind a few key statistics about credit cards, such as the fact that 70% of Canadians pay their cards off every month, the fact that credit card debt at the moment is only 3% of total household debt, and the fact as well that there are over 60 low-rate cards available in the marketplace currently in Canada. But in the interest of time, Mr. Chair, I'm going to touch just very briefly on 4 issues of interest for this committee. Starting on page 4 of our submission, I'd like to clarify a few points on interchange fees. As this committee well knows, interchange rates are set by the credit card companies, not issuers or acquirers. And further, while Visa and MasterCard do not receive the interchange fee directly, they do receive a transaction fee from acquirers, and they do receive a transaction fee from card issuers like banks and credit unions. I think the important point here is that in a credit card transaction, all participants benefit from the transaction, so all share in the cost. A key issue that has been raised in the committee hearings is around the disclosure of interchange fees by both card companies and by acquirers to merchants. And we've got to admit what we hear is that this is very, very complex. So we note from their presentations to this committee that both Visa and MasterCard have heard these concerns, and we understand they will be working more closely with retailers to resolve these concerns. And we've also heard the same sentiments from the acquiring companies that you had testifying before you on Tuesday. And even though banks do not set these fees, our members agree that there are things that can be further enhanced to assist consumers in better understanding this process. Banks as card issuers are considering better explanations for their card customers about the cost of interchange fees to merchants when credit cards are used, and clearly the suggestions of this committee are very welcome in that regard. If I could turn to premium cards, it's on page 5 of our brief. We know that this committee has heard a great deal about premium cards, particularly around the introduction and issuing of some of these cards to consumers. And we agree that there was some confusion on the part of some who received the cards, and there could have been better and clearer communications to the customer about why these cards were being introduced. Going forward, the lesson learned here is that more care needs to be taken to ensure that there is greater clarity for our clients in any such further implementation. Another matter that has been raised is the question of premium credit cards being sent to consumers without their consent. Now, I think there's a bit of discussion around this, but banks have heard these concerns. They are reviewing their practices around issuing these cards. And as well, there is a concern that a A true premium card, and I would say true is one that attracts a higher interchange fee, have been sent to people who perhaps should not have received them. And a step that could be taken by the banks is to further clarify for customers what the criteria and the requirements are for these true premium cards. Very briefly, Mr. Chair, on the third area I'd just like to comment on, and once again it's in our brief, page 6 in English, et c'est à la page 7 en français, the recently introduced new government regulations. Obviously, while the full implications of these regulations are still unclear, and we're still working through the implications, the impact of these, they will require significant changes to products, to systems, to processes. They will be very costly to implement. Still obviously looking at what that could mean. Estimates go as high as hundreds of millions of dollars, exceedingly material. We would be very pleased to answer your questions today on these regulations, and of course we will be commenting to the government in terms of the comment period that is available for public comment. Lastly, Mr. Chair, some comments on debit cards. That starts on page 6 in our brief, à la page 8 en français. While the current debit card system in Canada has served Canadians well, it needs to grow and evolve to meet the needs of a more integrated global economy. We know that Canadians are amongst the heaviest users of debit cards in the world, and that Interac can rightfully take credit for that. However, Interac is an association, and it operates on a strict cost recovery basis, which limits its ability to raise capital for innovation. For competition to be an effective driver of innovation, all competitors need to have the freedom to compete fully in an open marketplace, including Interac. Now, we know there are other players in the market. They have come, they have testified before you. Both Visa and MasterCard have recently entered Canada with debit products. I think the point I wish to make is that debit market choice and competition is an international reality, and Canadians should not be left behind. I'd like to conclude, Mr. Chair, by saying that the payment card system in Canada works well for individuals and for businesses. Nonetheless, there's always room for improvement. I've given you a few suggestions about areas where the banks are able to make changes to improve clarity and transparency for consumers. I would also stress that it's an exceedingly complex system. It's very important that we all carefully consider the potential impacts and consequences on all aspects of the system before new measures are put in place. Merci beaucoup. I'd be happy to answer your questions. Thank you.
Thank you very much for your presentation. We'll go finally to RBC Royal Bank, please.
Thank you. We appreciate the opportunity to appear before the committee today. My name is Kathy Honor, and I head up RBC's Global Cards and Payments business, overseeing card products in more than 20 countries around the world. As an issuer, RBC provides debit, credit, Visa, MasterCard, and Amex products all around the world. We are also our own acquirer in many countries, but in Canada and the U.S., our acquiring business was transferred to a separately run joint venture company, Moneris, who has appeared at these hearings on its own behalf. Up until earlier this year, I also sat on the Interac board. RBC is the second largest credit card issuer in Canada and the 9th largest in North America. Based on our experience globally, we believe that the credit card market in Canada is functioning well for consumers and retailers who are benefiting from choice, competition, and the convenience of a thriving payment system. Merchants have enjoyed virtually no changes to interchange rates for over a decade, despite rising fraud and payment costs. I acknowledge, however, that there have been a lot of changes over the last year to align Canada with other parts of the world. Despite these changes, Canada remains and continues to enjoy significantly lower interchange rates than similar industrialized nations. Canadians, consumers, are happy with their credit cards, both consumers and businesses who heavily use credit cards for both payments and cash management. In the February 2008 Forrester research issued on the Canadian customer experiences, they issued overall customer experience ratings across multiple industries, and Canadian credit card issuers came out with amongst the highest ratings. In closing, we are privileged to participate in one of the world's largest and most successful electronic payments markets. At the same time, we recognize there's always areas for improvement, and we will continue to work with our customers, the industry, and the government to ensure that Canada's payment system remains one of the best in the world. Thank you.
Thank you very much for your presentation. We'll now begin with members' questions. We'll start with Mr. McKay for 7 minutes.
Thank you, Chair. Thank you, witnesses. I'm going to be interested in the issue of credit cards. Now, in the early part of this year, I received this card, and I have an old card. I'm not going to show you, but this one's got an infinity on it, and apparently, if I take this card to a merchant, the merchant is paying more money for this card than if I take this card to the merchant. And I had no idea until these hearings started that that was what was happening to these merchants. And I like to think that I do pay attention to these things, but maybe that just slipped by. So I want to know what's the difference in the rate of interchange between if I present my Infinity card as opposed to a regular card. What's the difference in the rate between the two as far as the merchant is concerned?
Sorry, of course, we're all dying to know what card, Mr.
That's why I didn't show it to you.
Oh, darn. It's seriously, there are so many cards, but I'm wondering if one of my colleagues here would take that question.
1/5 of 1%, 20 basis points is the differential.
So I'm told it's about 20 basis points through to about 0.3. Now, if I take your base of about 1.5, that's your base rate. Is that correct? 1.6. 1.5, 1.6.
On a blended basis, and it depends for every issuer because it depends on the consumer behavior of where they shop. That's about 1.5 to 1.6. Yes. 1.5,
1.6. So. And you're saying 2 basis points on top of that. I've heard it up to 3.5 basis points. That's about a...
No.
No?
I'm sorry. Make it 1.7 to 1.8, not 200 basis points.
Sorry?
That would make it 1.7 to 1.8.
Ms. Longo, there's no need to touch the mic. They will control it for you.
I'm sorry.
Yeah.
I'm sorry.
No problem. No problem.
So in terms of an increase on 1.5 and 2 basis points, what's that work out in percentage terms? In terms of your increase of your fee?
So it's 20 basis points on 1.6.
If you've got a base of 1.5 and you're increasing by 0.2, you're at least 10%. And
it is. It's about 12%. You're right.
So effectively, you've increased your revenues by at least 10%, possibly as much as 20%, by just issuing that card. Is that correct?
No. That's not correct.
Why is that not correct?
Because that is not the only cost factor. You're looking at just the interchange factor.
I'm only on the revenue side. I'm not on the expenditure side.
I agree with you. So, I'm still on the revenue side as well. So we increased our features and our costs and our benefits to our cardholder. Our success depends on attracting and retaining our cardholders by giving them the most competitive offers. And we increased features and benefits on those cards at no extra cost to the consumer.
Okay, you're adding toys on the card. I agree.
And those cost us.
But the simple math on this is that by issuing these new cards, you've increased your gross revenues, if you will, by something in the order of 10, possibly as much as 15%.
Agree with that.
Okay. Well,
if I could just sort of clarify,
yes.
Mr. McKay, the true premium cards are a relatively small part of the marketplace. I think they're under 10%, probably only about 9%. So while there is that 20 basis point increase, it's a small part of the whole portfolio. So that takes that down.
What percentage of the credit card market did the premium cards have this time last year?
I don't have that information, but perhaps my colleagues do. But it's still a relatively small part of the market.
Could I suggest to you that you've been working that part of the market to try and increase the uptake on the premium cards? Would that be correct?
Yes, maybe I can respond. So I think before, generally, the percentage of premium cards would have been around Amex's market share. So all of Amex's cards are premium cards. And our customers, we are competing with Amex for those cards and in their wallet. And for merchants, by taking our cards at 20 basis points higher, we are significantly reducing their cost if they had an equivalent Amex card in their wallet.
So you're all competing for this mythical customer, well, maybe not so mythical, a customer who's got, quote unquote, money in his or her pocket. And so you're issuing these premium cards with some more toys attached to it, you've increased the costs, and I'm not disputing that you've increased the benefits as well. And how do you get to be a premium customer?
And there was rigorous criteria. The network set the criteria for those niche amount of customers that could qualify. As Terry said, it in general is about less than 10% of customers. These represent the merchants' highest customers. They spend with a higher velocity, they spend with a higher average transaction size, and they tend to be the same customers that were on the Amex brand, and we attract and displace that Amex spend onto our cards.
So some of the qualifications would be minimum household income of $100,000, and that we can't set a preset limit, which again, it sounds like a lot, maybe 20 basis points, but it's proportionate to the risk. So those consumers they travel a lot, they want to be able to go into that store and put any amount onto their card.
Okay, 1 minute, Mr. McKay, 1 minute.
You know, looking at it from your market model, you want to drive these premium cards because it only makes sense from your standpoint. On the other hand, a credit or a merchant is locked into accepting that card that I present, regardless of the cost to him or her. So, aren't you really driving your growth in premium cards on the backs of the merchants?
So I can respond once that so I can tell you our own statistics in terms of the consumer that went onto a premium card in this very bad market where generally we've got negative growth on spend. Those cards increase spend, so the merchants have benefited. They're benefiting from the fact that that customer can now walk in and spend any ticket size they want, where before they were limited.
Going forward, what do you see as the percentage of the market that these premium cards will occupy?
Okay, quick answer.
I don't see it changing much from where it is now.
You're going to stay.
Thank you. Thank you, Mr. McKay. We'll go to Monsieur Laforêt, s'il vous plaît.
Merci, Monsieur le Président. Tous les témoins. Madame Hughes, tout à l'heure, lors de votre présentation, vous avez dit, un peu comme une mise en garde, vous avez dit, je pense qu'il faut être clair que l'industrie bancaire n'a pas sous son contrôle toute la question des contrats entre les acquéreurs et les marchands.
Sorry, Monsieur Laforêt, excusez-moi.
Sorry, there was a technical problem. Now the sound is back. Sorry. Shall we start over again? We go back to zero? Please. Ms. Hughes, you said earlier in your presentation that the banking industry doesn't have control. Well, you expressed it as a sort of a warning. You say that we're not responsible for everything, not the context between the acquirers and the merchants for the interchange rate and so on. So, in some way, I would think that when you have targeted what is of concern to us here in the committee, and I've learned over the meetings we've had in the last few weeks that there is no interaction, or at least very little. There is some, because money is changing hands between the issuers and the acquirers, Visa and so on, but there is no interaction or control of one over the other or the others. And that means that on the one hand, there are these acquirers and the issuers and the merchants who provide the goods to the consumer using the credit card. At some point, there's no overview. Well, there is one, but it's quite complex. And it's so complex, in fact, that consumers really don't understand exactly what's going on in this whole process. And a number have the impression, I'm quite convinced, that they are suffering. Let me give you an example. they're enduring the credit card system. Someone who wants to travel in Canada has to make a reservation using a credit card. There are situations where even cash isn't worth as much as a credit card. It's a system whereby we're all forced to use credit cards, and there's a lot of discontent. The committees have looked into this to try to get a better understanding as of what is going on, or at least to shed some light on this whole business. After the two committees, Industry and Finance, have finished their work, and I know that the banking industry, well, you said that we talked about the free market. We understand that the bank is interested in making money, and so are the others. If we realize that whether it's on the side of the consumers or whether it's on the side of the merchants, that there is some injustice, well, I think there is some. I wouldn't start from that hypothesis, but I would say that so far it's hard to understand why merchants have to accept all the credit cards, why there are these premium cards being offered by the banks, and that everyone's getting on board in the system without really knowing why. If the committee realizes that there is some injustice, don't you think that the government should introduce regulations at some point? Well, my question is to Ms. Hughes, but the others, of course, may add something. Let me make a few comments, and then I will turn the floor over to my colleagues here. For my part, I think that rather than introducing regulations in whatever field, the best approach is for choice, for competition, and a good understanding on the part of all participants of their benefits and their responsibilities as well. Can you tell me why the discount fee is 0.25 at the moment, and the bank rate, the ones that issue the credit cards, isn't going down? The gap is growing between the prime rate of the Bank of Canada, but this isn't dropping. So I'm asking that question as well. Yes, of course. Just to carry on in answering your first question, obviously the system is very complex, but it's also obvious that each party in this system has a certain responsibility and a certain objective for competition. I think among the card issuers, there is good competition. There are 1 million credit cards out there for consumers. And on the other hand, there is competition among the acquirers, for instance. Just to clarify,
because this is a frequently asked question, on the Bank of Canada interest rate, it has a very, 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 very small impact on the overall cost of funds of any bank. It is less than 1%. It is an overnight clearing rate for banks. So I think that point is sometimes there's a bit of a misconception about what exactly the Bank of Canada rate is. And as I mentioned, there's obviously a huge choice of credit cards in the marketplace where you can get low interest rates, you can get rates tied to prime, etc. But the fact is a credit card is an unsecured card that has a lot of risk involved. And unfortunately, as we see in today's environment, and we've certainly seen that recently, the risks are rising, and therefore the issuers must respond to that risk for the benefit of being able to provide cards for the entirety of their customers.
Monsieur Laforêt, vous avez 1 minute.
J'aimerais ça que vous nous disiez, vous avez dit là, que ça ne joue que pour 1% ou à peu près, là, la différence entre les taux des cartes de crédit et...
Non, c'est un 1% du taux de tous les fonds.
Parce que
les banques ont la responsabilité, ont le travail d'aller chercher
si le taux d'escompte était de 4% aujourd'hui, là.
Non, mais le 1%, je m'excuse si j'étais pas claire, Monsieur Laforêt. I meant that.
Isn't clear, Mr. Laforêt. I meant it was one for
Elsewhere.
Oui.
And it costs much more than the Bank of Canada rate. That is my point.
In fact, over this same
Okay.
period, our interbank lending rates have gone up, not down.
Yeah.
J'aurais une autre question. Vous pouvez-
I have another question. You can answer in writing later on if you care. What kind of investigation are you doing before you issue credit cards? I'm taking an example of students who have no credit rating, who are getting credit card offers for $4,000 or $5,000. Can I get an answer?
Very, very brief response.
I think perhaps others could answer on the student cards. Mr. Kitchen, were you?
I would suggest that it is certainly not within our policy where we would see students getting $4,000 and $5,000 credit limit. Usually it's a very small credit limit, typically $500 type of thing, which is much more in the appropriate level. We don't typically grant $4,000 to $5,000.
Okay, thank you. Thank you. Will Mr. Menzies, please?
Well, thank you, Mr. Chair, and thank you, ladies and gentlemen, for appearing here today in this most interesting discussion. I've got a question that I would like a comment or a response from each organization, and I know, Ms. Hughes, Anthony, you represent the Canadian Bankers Association, and I'm going to refer to a conversation that you and I had some time back when I shared with you that we were getting a lot of concerned constituents who, by common terms, are your customers as well, that are customers of the banks, credit unions and banks, I should say. They were concerned with credit card fees, as well as the issues with debit cards coming forward. And so I had suggested to you, and I'm quite sure you do your job well, I'm quite sure you went back to your membership, I had suggested that it would certainly be helpful if all of the players in this, the issuers through to the banks, all of those involved in a credit card transaction, sit down and work this out. Because our constituents were complaining to us enough that we were going to have to do something about it. And I suggested to you at the time, if we end up having to regulate that, if all the players in this business don't get together and fix this problem, you're probably not going to like the regulations we have to put in place. We're still trying to avoid that. We put in what we think are some realistic regulations. The comments from from Australia. They're prepared to step back now from regulating direct interchange fees if the industry shows it can take steps to increase competition. How was that message received when you shared that with your membership and a comment from everyone? Why couldn't we get this competition worked out so it was fair to everybody, fair to the retailer, fair to the customer, and fair to the providers that are involved in the whole process?
If I could respond first, Mr. Chair, and I hope Mr. McTeague's not leaving the room, because I think there is I think this is it's a very logical and sound suggestion. There are legal impediments through the Competition Act. I mentioned that because I know Mr. McTeague's an expert on the Competition Act. That prevent any industry, and certainly the banking industry would be one, or any other industry, from getting together and agreeing on pricing, on any agreements concerning the quality or quantity of products, and allocations of markets or allocations of customers. And because obviously all the banks that are members of the CBA take this extremely seriously, it is just not feasible for us to kind of get around the table and say, oh, how do we fix this market? We would have, we would obviously be challenged by the competition commissioner. I suppose there may be ways for the government to call us together, Mr. Menzies, under the umbrella of a ministerial exemption under the Competition Act. That could be done. So I think at the moment what we find, and I'm sure this could be potentially kind of frustrating for you around the table here, is that you may hear from the banks and then you may hear from individuals, but I think you would find it very difficult and totally against the Competition Act for us all to get into a big room and cook this up. So, if the committee does have suggestions about better ways to resolve some of these issues that are permissible, I'm sure that we would be very happy to hear those.
Well, by all means, I wasn't suggesting collusion. I was suggesting leadership. Leadership may have solved a lot of these problems if by showing leadership, making it competitive so it's fair to everyone involved in the system, we may not have been meeting here today.
I know, but
not that we're not enjoying it.
I think it's extremely competitive, but just to clarify, I don't think all the banks could get together and suggest how Visa and MasterCard could do their business. I think there'd be a lawsuit in my in-basket in the morning.
Can I make a
sure.
Just another comment, though? I mean, in terms of your point about there are concerns out there, and cannot the competitors get together or at least to deal with it? A lot of these issues are commercial matters between commercial entities, and I think what you're hearing from some of the players, I can't put words in their mouth, but we've heard their commentary, the card companies and so on, is that they'd be interested in exploring commercial solutions to them. And I think that the messages have been received loud and clear. And as Ms. Hughes Anthony said in opening comments, we've heard the messages loud and clear too, and we're sort of exploring ways that maybe some better disclosure and some better clarity. So I think there are different components in this game, and each of them in their own areas of responsibility are saying, so what can we do here? So I think some of that messaging is getting through.
Very much.
Anybody else like to comment on that without appearing to be colluding with each other?
We've got about 1 minute.
Okay, let's quickly then, let me just go back to one of the changes that we did make in this minimum 21-day interest-free grace period. And Ms. Hughes Anthony, you had suggested that some of these changes that we've already put in place are quite costly, but let's look at the other side. What is the benefit to consumers to this? Because in our consultations, we heard that was a particular issue with many customers / constituents of ours. What benefit has that been to them?
Well, for starters, Mr. Menzies, I would just remind you that we are digesting these regulations. There's a public comment period, and all parties will be commenting before, I think it's the 13th of June we have for these comments. Clearly, there are some, I think, great improvements for consumers in terms of some of the points in these regulations. We already have in Canada, contrary to other parts of the world, quite robust disclosure regulations, the cost of borrowing regulations. These certainly enhance and build upon those. And some of the, shall we say, standardization of grace periods will probably make it very much easier for consumers to understand their statements. I think the challenge that the industry will have is that there's just a heavy burden in these regulations to explain this and change this and do that, which will very definitely be costly for the industry to implement. And so we're in the middle of assessing exactly what those costs are. But some of the good ideas, let's say there's a good idea in there about putting a personalized calculator on everybody's statement about how much, there's 68 million card holders. So I would just say, some of the operationalizing of this is very, very difficult.
Thank you very much. Thank you very much. We'll go now to Mr. Thibault, please.
Thank you, Mr. Chair. Again, thank you everyone for coming today. It's kind of interesting to look straight down the line to have this conversation with you. I guess where I'm going to start are some of the specific questions relating to the consumer side of credit cards. And of course, ultimately, the merchant and the exchange fees ultimately come back to the consumer as well. I had a figure of 50 million, but we're saying 68 million cards out there. And we're talking about 70% of them that you're saying are paying their bill on time, and we're never really having to worry about the interest rate. But 30% of 68 million, you're the bankers, you could do the number a lot quicker in your head than I'm sure than I could. That's still a significant number of people across the country that are being affected in this economic downturn. And we understand that you have unsecured risks, and you need to cover those costs, and you need to ensure you're still making a profit, and I understand that. And when I started asking the questions in the House 6 months ago, we started to get inundated with phone calls of people showing us examples on their bills that, you know what, I've always made my payment, and unfortunately right now I'm watching every nickel and every dime, so I'm having to make the minimum payment this time, but I made the minimum payment 2 days late. And my interest rate, because I was 2 days late, went from 18% to 24%. You know, I have examples like this, a 17-year-old who has a credit card, and now their parents are being forced to get the credit card because this was an unsolicited mailing, and the 17-year-old submitted and got the credit card. So the concerns that we have are relating to the interest rates that are being charged. You're talking about that there's 60 low-rate cards right now. Well, if there's 60 low-rate cards, why aren't we, as the issuers of the cards, why aren't you automatically giving someone a low-rate card when they start off with the card? And then if they so choose, can they move up, you know, if they demonstrate good history rather than you know, handing out the premium cards? I know I'm talking a lot, so there's quite a few questions in there, and I'll leave those, and then we'll go back from there. Anyone want to start with that? Or?
I can begin on the low rate. I think you raise a very good point. Should customers be able to start with a low rate? One of the things we've done for many, many years, and it's something we're proud of, is that customers can select, in our case, their rewards first, and then they go on to pick whether they want to have the standard interest rate. In other words, they probably won't carry a balance regularly, or a lower interest rate, and they pay a fee for that, but they don't have to give up their rewards in order to get an interest rate. And we know that consumers love to have rewards but also want to have an attractive rate. So we declare right up front with our consumers on our applications on our internet site that they can have an 11.9 rate on their card, and we even go as far as on the internet and in the branch to give them a calculator to say, here's the amount that if you carried every month, you'd be better off at the lower rate than the higher rate paying the $35 fee. So I think the market does react, and I think sometimes we just look at what is advertised, but there are programs out there that can help consumers lower their cost of borrowing.
Does anyone else want to jump in, or do you want me to go to the next question?
I would like to jump in on that one. So much like Mr. Kitchen said, we offer low-rate cards as well, as low as in the single digits of interest rates. So choice is a big issue that the consumers want and the issuers provide, anything from single digits up to 19.5. We've had low-rate cards in the marketplace for 12 years, and much of our acquisition of new customers is on low-rate cards. And we deal with our customers to meet their individual needs all the time. You mentioned customers that are maybe living a little more hand-to-mouth, and we counsel them to move to low-rate cards, to our 11.5% card. We will actively move our customers. We will actively put customers on something we call pre-authorized payment to make sure that they have paid their bills from their account on a monthly basis to keep their credit bureau in good standing and help them and advocate for the customer on those. In the case of CIBC as well, whether you're on a low-rate card or a high-rate card, we provide what we call our Credit Smart features, which is you can set budget, and we will send you alerts so that you can be your own money manager, your smart money manager, and that if you say, I don't want to spend more than X amount, we will send you alert when you say that. hit that amount, but consumers have choice, and they need to take accountability for the choices that they make.
I agree that every consumer has the personal responsibility. We're not saying that once you get credit, there is responsibility that you have to have. Unfortunately, what we're hearing loud and clear from these card holders is that they're not being counseled back, and I'm sure that's happening. But from the people that I'm hearing from, it's the opposite. Right? We're hearing the complete opposite. If that they're 18%, they're being now going up to a punitive 24 or 25% because they've been late or they missed a payment, even though they've been communicating with whatever institution it is. So I think what, you know, and to comment on something that Mr. Menzies was mentioning, I think it's important to recognize that if you wanted to police yourselves, so to speak, when we're hearing these stories and get constant examples from it, it's starting to tie the hands of the government in saying that we're going to have to get in there and do something. What do you recommend we do? Because you're talking about the counseling side of it, and I'm sure everyone else can give me some of those examples. But we can give you stacks and stacks and stacks on the opposite side of emails and letters of people saying, how is this fair and how is this right?
What I would recommend is if we can get those back, because I mean we're not seeing them. We monitor our top client concerns. We go to the FCAC and ask them for their concerns. They're not seeing this. So I think transparency and communication, get that back to us. We're not saying that we're perfect. There could be exceptions, but I would echo the comments here that the general practices are exactly as we said, that most people carrying balances are in the right cards.
30 seconds.
Perfect. Just to clarify, though, you said your top clients, and I'm assuming those are...
No, top. We monitor all the complaints, all of them.
Because the top concerns, because
this is not in a top concern.
And it's not trying to be specific to anyone, but I've got literally emails from people who are talking, so I'd be more than happy to
send them to us. Absolutely, we welcome and we will deal with every one of them.
Thank you, Mr. Thibault. We'll go to Ms. Cody, please.
Thank you very much, and thank you all for appearing here today. I appreciate you taking the time from your hectic schedules. I know it's very interesting in the banking community these days. Access to capital, I'll say it just on behalf of all those people across the country that need access to capital. So we really do appreciate you taking the time today. I have 5 minutes, so I'm going to be rapid fire. Mr. Whalen or Mrs. Goulart, can you just tell me, are you offering premium cards as well?
No, we do not offer premium cards.
Okay, so you're not having the same issues around premium cards?
No, we don't.
So you didn't do a mass mail. I'm going to go to Ms. Hughes-Anthony. Thank you again for joining us today. You, on behalf of your banks, we understand that the premium cards were issued within the last year. They were sent basically unsolicited to clients. I'm being one of them. I got my little premium card, didn't ask for it, didn't want it actually, in the mail, have been using it successfully since, I guess. Did not realize the impact to merchants on that. Could you tell me what percentage of your current, I think you made reference to a fairly low number, but how has it grown? How has your premium card market grown over the last year?
I'm not sure that I have the actual base figures from some year ago or something. I know right now that premium cards represent about 9%
of the more like 20. So that's
of the cards in the marketplace. No, I don't believe that is a fact that we can in any way clarify. It's less than 10%. It's about 9%.
I'm sorry. I was going to say a lot of, there's a phrase premium cards, and it tends to be used very generically. You can have a gold card or something. But the premium card that I think is the focus
chip
here.
Card, shall we go?
Well, no, chip card's a different issue entirely. Like the premium card that has that is targeted to very specific levels of, customer, but also attract that somewhat higher interchange. That's the one, and that's the 9%.
Okay, I'm going to get even faster now.
Okay.
Interchange fees, you have no impact on interchange fees, is that correct?
Correct.
You have obviously the merchant discount fees. Have they increased over the last year?
Well, I think, sorry, I think one of my...
In a general sense. I have to get to debit cards, so that's why I'm being...
Sorry, what was the question?
Merchant discount fees. Have you, as a part of the banking system, have you increased merchant discount fees? Which, of course, all...
So that would be an acquirer question. And so if the merchant discount fee includes the interchange rate, so if the interchange rates have gone up for the premium cards, then by definition the merchant discount rate would too.
But to clarify, that is not something that the bank sets.
Impact on.
Yeah.
Okay. I'm going to ask another question on, I think it's already been asked, so I'm going to move on to debit. As you know, the Visa and MasterCard wish to enter the market. Do you see this as a positive, negative? I read your statement. Your comment on that?
I think, you know, generally speaking, as we said it in our brief, the members feel that the best thing for the consumer is to have a wide choice. And certainly we understand the issue with Interac, which I believe is going to be testifying in front of this committee shortly, that it at the moment is requiring, it's asking for some kind of restructuring that will help it compete. But clearly there are other products already introduced in the market, and I think our view is the best policy is to allow this competition for the benefit of consumers. I don't know if Kathy, did you?
Yeah, I'll just add to that. So I've sat on the Interac board, and I would echo Monsieur Lafour's comments around merchants not being forced to accept credit cards. Part of the problem is that Interac debit cannot be accepted or not be used right now at vending machines online spending. It can't be used internationally. So we need to innovate and invest in our debit system.
Okay, I'm just going to go back to the chip card and the chip, because it does apply to both debit and credit. Would you say generally that the chip cards are so that you can have less fraud? That you're concerned about fraud? I see nodding heads everywhere. Yes. Okay. Would you clarify that in general, and I think RBC said it, that your fraud issues, I think, have been going down over the last. You're saying that they're going up, your fraud. Is it fair to say that when you are moving to the new technology of this chip card, that you're now passing on that fraud-related cost to merchants?
No.
I'm seeing no. Debit card, that's my understanding that the debit cards especially, I'll go to debit now, the cost of fraud will be passed to the merchant.
Would you like to? No, I mean, that is definitely not the case. It's unfortunate that the cost of fraud is increasing. Generally, the bad guys, unfortunately, are continuing to get smarter and smarter all the time.
Okay.
So so chip will prevent fraud, and it's around the world. Chip has been implemented around the world. If a merchant doesn't put in a chip reader, and therefore is pervasing it, then they would be responsible for fraud. As long as they put in a chip reader, the issuer is responsible for fraud.
Okay. Thank you. Thank you, Ms. Cody. We'll go Monsieur Vincent, s'il vous plaît.
Merci, Monsieur le Président.
Thank you, Mr. Chair. I would like to continue along the same lines as my colleague when he was talking that it was 2.5%. You could borrow money from the Bank of Canada compared to the interest rate that you charge on credit cards that can vary 14, 18, 19%. Do you think that this interest rate compared to the cost of the interest rate generally is much too high for consumers? No, as I just clarified, I'm going to ask my colleagues to add to this. The Bank of Canada rate is less than 1% of the financing cost of banks. So for the cost of money, so to speak, for a bank, they have to find sources of funding in Canada and abroad, and the cost of that is much higher than the Bank of Canada rate. Perhaps I could ask my colleague to continue along these lines. Is this money available? Can you borrow the amount you need from the Bank of Canada at this 0.25% rate, or is it just something that it throws out? It says that there's money available, and that they can say that at the moment the money is available. If the banks and the caisse want to have that money, it is available, that the interest rate is so low on it so that the economy can get going again. I'm going to have to speak English to answer this question.
Bank of Canada rate is literally an overnight rate. It only applies to that overnight settlement. That's literally all it is, and it's, as Ms. Hughes Anthony said, less than 1%. But now let's look at the credit card interest rates. A lot of people talk about 19% and so on, but there is a wide array of low interest rate cards. You have to look at the whole array of interest rates available. First point. Second point, again. When you look at how cards are used, 70% of people pay it off. So in effect, the interest rate is zero. And from the bank's perspective, that means that there's up to 51 days of both interest-free period that has to be managed, and it's unsecured credit. Now, you also have to take into account all the costs of issuing the cards, running the system. We talked about fraud a moment ago. There's $500 million last year of fraud, and that was actually up 34% from the year previously. That all has to be managed in terms of the offering of that card. We talked about the chip and security. Again, that is a continual battle to keep ahead of the game. That also has to all be reflected in that card. So all of those things taken together, and particularly we've seen the risks growing. This is unsecured and relatively risky credit, and it's got to be priced accordingly.
Si je peux ajouter. Oh,
J'ai d'autres questions. J'aimerais savoir.
I have another question. What's the difference between the money that you need from the Bank of Canada and the money that you need overall, the money that you need for the payment of credit cards? If you say that 70% of people pay off their credit card balance, that means that only 30% of them are using your money. So if they're so the overall money that you need is much lower than for others. So the Bank of Canada, there's this money of consumers that put their money into the bank accounts, and they're getting 1.75% or something, and that's the rest of the money. Because I did a little bit of a study. You were saying earlier that on the Internet you can find out what the interest rate is. I got $2,500, 18%, and if you just pay off the minimum, you know how long it takes off to pay off the $2,500? Takes 8 years, 6 months. Just 2 comments, if I might, briefly.
Globally, and they tend to fund themselves on a matching basis. So they need so many funds for short term, they have so many mortgages at 5 years, they have so many mortgages 10 years. They need to match those funds in the global market. So there's no funds that are actually set aside and said these are for credit cards. But I would also point out, Mr. Vincent, that a credit card is only one type of financing. Someone might be better off with a line of credit. They might be better off with a short-term loan. That a credit card is not potentially the answer for everybody's financing needs. And so people have the opportunity to shop around for the type of credit card they need, but you might be better off with a line of credit at a totally different interest rate if you want to hold a balance for some period of time.
Okay, thank you. Merci. We'll go now to Mr. Wallace, please.
Thank you, Mr. Chairman, and I want to thank our guests here today. And to start off, I want to thank the Canadian Bankers Association. I've asked for information that's been able to use for my constituents at home to explain the banking situation in this country and on the credit cards. I've done an excellent job of providing that information, and I appreciate that effort. And to be frank with you, we're as Canadians, we're pretty proud of the banking system we have here compared to what's happening south of the border and elsewhere in the world, and I appreciate the work that the banks do. However, there are problems, and that's why you're here. I'll ask Nancy, I'll ask you a question first. You talked about disclosure and transparency, and you thought you've been pretty good about it. Now, my friends from, I happen to be a customer, so I can say it. So my friends from TD Bank, right, that are here, Mr. Salas, here's what the agreement looks like. It's 4 or 5 pages, both sides, very small print. Then we have, the actual agreement where I sign up for it, very, very small print. And let me just read you a little bit here. The preferred, and you talked about interest rates and being transparent on interest rates. The preferred variable annual interest rate for the TD Emerald Visa card is one of the following: TD Prime plus 1.9%, TD Prime plus 3.9%. TD Prime means annual interest rate established and reported by us to the Bank of Canada from time to time as a reference rate of interest for the determination of interest rates that we charge to customers of varying degrees of creditworthiness in Canada for Canadian dollar loans. That is not very transparent. That's not very clear, in my view. Would you agree, and do you agree that there needs to be, and as has been announced, that we need to clean that up so that consumers at least know what they're signing up for?
Well, I would agree, but I would also say, Mr. Wallace, that we as an industry need to respond to the cost of borrowing regulations. And chances are behind every one of those darn little tiny paragraphs there is a regulation that makes us explain that. And so we've now got a whole bunch more regulations which we're going to have to add to that. That said, I know that there are some suggestions in the regulations the government has brought forward, for example, to put a box very clearly on an application that will provide the top statistics for the consumer. Boy, if that helps, and if that does clarify that for consumers, obviously, you can't do enough to explain it. But obviously, there's a representative here from TD that I know is going to speak to every one of those little paragraphs and codicils.
I don't have that much time, though.
The only thing I would like to add to that is to say that we recognize that the words are very complicated. We've been struggling hard to try to find, plain language to help explain some of these terms. The net result, however, of what you've read is that the customer there would enjoy an interest rate as low as 4.15 or as high as 9.15.
Yeah, but there's no way I would have known that. And I'm not the smartest in the toolbox, but I'm not too bad. And there's no way that I would have figured that out. The one thing I want to know, part of the announcement was the 21-day grace period. I know you have a number of crunchers at the bank. Have you figured out what that savings is to consumers, and would you share that for us? On an average, of course.
Yeah, that is an industry-wide implications. It has implications for many more than those around this table, many more institutions than those around this table. I know the minister has said when he announced that specific change that it had probably an impact of tens of millions of dollars. I think that's a low estimate, quite frankly. I think that there will probably be more impact just on that change.
More impact to the consumers?
That's on costs.
On costs. I'm sorry, I thought that was your question.
No, my question is,
costs.
what have you guesstimated that the savings to consumers, the people who actually hold your cards?
Well, the same thing. The same thing. In other words, the change in that calculation that previously would have cost consumers in tens of millions will not be there. Not be there. So
my final point, and it doesn't really need a response, but this has been a very complicated area. First of all, I didn't realize there was, when people on my street say TD or MasterCard, they think it's Bank of Montreal or they think it's Toronto Dominion, and you are the issuer. They don't think of the Visa or MasterCard as separate companies, and they definitely don't know about the spin-off that you guys have done on these individual companies that actually administer sort of middlemen, the payment guys or whatever you want to call them. But in my view, you guys, my constituents are your consumers. They're the consumers of the card. In my view, the banks are the consumers from TD and Visa. And I don't understand.
MasterCard?
Or Visa and MasterCard. Yeah. I don't understand how they've gone from 3 levels of different interchange fees.
Thank you, Mr. Wallace.
To 19 without any pushback. I don't get that. You can think about that. That wasn't a question.
Okay, they will think about your question, Mr. Wallace. We'll go now to Mr. Rhoda, please.
Thank you very much, Mr. Chair, and thank you for coming out this afternoon. I'm going to ask a question and a request. It's some homework, and I don't expect an answer right now, but there's talk of preferred clients and the ones who are asked for premium cards. Could each and every one of you maybe submit in writing what constitutes a premium or a preferred client? And I'm sure that would take up the 5 minutes and then some. If it's submitted in writing, we can all look at them and study them. Just to clarify the way the system works, and I keep hearing that competition is a good thing for any system. What happens is we have 4 basic players. We have the credit card company, we have the banks, we have the merchants, and the card holders. Now, the idea is that each and every one of those has a component, but the credit card company is trying to get banks as customers, and the credit card company is also trying to get the card holders as customers. The merchants have to, they're customers as well, but they're using the system. Now, the competition really is to get the banks on side and the card holders. What ends up happening is the cost goes up to the merchants, which helps the bankers, what happens is it's increasing the cost to the merchants, and in the end, the cost to the merchants eventually makes its way back to the card holder. So really, it sounds like a pretty good system when you raise your prices, the credit card issuers make the money, the banks make the money, and then the two people paying for it are actually making a profit, or are the losers. So my question is, I've got two questions. The first one is, and I'll ask all my questions and then you can go on so that there's no back and forth, and we'll hopefully cheat a little bit more, get a little extra few minutes while you're answering. My question is, what controls are in place to stop banks and credit card companies? I guess I'm putting them both in the same place, and I know you're going to tell me they're different, but what is stopping them from changing their rates to the merchants? And as the competition gets more fierce, what's stopping the interchange rate from rising and rising so that we can get higher fees for the customer, who is really the banks of the credit card companies? My next question, I'm going to refer to the householder information for constituents, which you passed out. It's an excellent document, and I'm just going to read a little bit, and I'll ask you to comment on that as well. And it goes, and I'll quote, "The difference between our system and some others, notably the U.S., boils down to a few key features: a national system that is well regulated, well managed, and well capitalized." And then on the next one it says, "Canada's banks are well regulated by the Office of the Superintendent of Financial Institutions and the Financial Consumer Agency of Canada." The question I have on that one is, what kind of regulatory system do you suggest for the credit card issuing, for the credit card companies and banks, so that we can have something reasonable for Canadians, merchants, and banks, and the credit cards, so that everybody works well together?
Okay, there's about a minute and a half. Mr. Campbell, do you want to start?
I'll start perhaps with the first question, and maybe some of my bank colleagues will wish to step in. Just on your first question, sir, on the question of interchange and how it's set and all of that. Again, you're absolutely right. You predicted, we will say, the banks do not set that. That is the card companies. But I think it's broadly known, they set the card companies. What is their product? Their product is the network, and they're interested in trying to drive as much traffic through that network as they can. So what they do is, and their mechanism for that is the interchange. What they try to do, as we understand it, is to set the interchange to balance it. They have to make it attractive enough for issuers to say, yes, we'll take that card, but they also have to make it attractive enough for merchants to say, yes, we will achieve it, or we will use it, accept it. It's that balance between the two. And now the question is, have they set it right? I mean, that's a matter for the card companies, but they do try to achieve that balance so they get flow through on their network. Now, any of my colleagues wish to elaborate on that, or do we want to move on to the second?
We've got about 30 seconds, so
okay,
why don't we do the second question?
So, Nancy, do you want to take the second?
Yeah, sorry, on the second. The second question, Mr. Rhoda, I think you're asking what type of regulatory system. I mean, we would clearly endorse the fact that the best regulation is fierce competition and very, very good information and disclosure, and also a lot better financial literacy amongst Canadians. We already have cost of borrowing disclosure regulations, very extensive. We have new regulations which the government is just in the process of consulting on. We have the FCAC, which monitors all kinds of consumer-side complaints and problems, should there be any, and provides additional information, which is very useful. So our feeling is that regulation is not necessary in this context.
Okay.
More regulation than what's there.
Thank you. If we can just, the two issues you wanted addressed in paper, if we could have that submitted, that information submitted to the clerk, we will ensure all members of the committee get that. I think it was on the, just the one?
Definition of premium.
Definition of premium.
Definition of
qualifications for premium cards.
Clients.
Definition of their preferred clients.
Okay.
Okay.
Fine.
Who
Happy
qualify
to do
for
that.
premium cards. Thank you. We'll go to Mr. Van Kesteren, please.
Thank you, Mr. Chair, and thank you all for attending. I have a number of questions I want to ask, and you may not have the answers to them. Maybe you can get those for me later. I think, though, if we're going to complete this loop, if we're really going to understand what's happening in credit card usage today, we need the answers to these questions. How much cash is in circulation in Canada today? Does anybody know that? Can you get me that information? How much money would be needed in circulation if credit cards were eliminated? And do you have numbers of increased, I want the numbers of over the past year of credit cards, say the last 20 years, how many credit cards have entered into the system, how many more credit cards we're using? Maybe if you have some of those answers, Ms. Hughes, you can answer those. And do you have statistics on sales revenue in the marketplace? And I've asked that question before, and nobody's given me that answer, in regard to the increase of credit card usage. So in other words, can we see a reflection of what's happened in the marketplace since credit cards and as credit cards accelerate? And then personal debt. How much is personal debt? You mentioned personal debt. What is personal debt today in Canada? Do you know what that is, the figure? You said it was a percentage, or what percentage is credit card, but what is personal debt today? Do you know the figure?
The figure right off the top of my head would get that, but credit card debt is about 3% of it.
3%.
Households.
In relation to, or in comparison to, say, the U.S. or Germany, do you have those figures? Do you know what it is in in the U.S. credit card debt?
It's in the U. I'm sorry. Go ahead.
No, you go ahead.
I would say we can look at the specific figures here, but I can tell you in Canada, household balance sheet, household indebtedness, ability to repay, debt servicing ratios are considerably better than in the United States. Delinquency on mortgages, less than 1%, 0.3% in Canada, considerably higher in the United States. We have a much better system in this country.
Can you give us some statistics? It's fine to say we have a better system, but I'd like to see comparisons, say, U.S., Germany, and possibly Japan.
We can do that.
I think that gives us.
Yeah.
Okay. And is that personal debt on the increase or is it on the decrease? Okay. And then I also want to know what are the statistics? Again, I've asked this question. Nobody's been able to give me this. Business expense for bad debts over the past 20 years. Where has that gone? Most businesses write off bad debts at the end of their fiscal year. And if you could give me if that has changed, if that's improved. And
just to clarify,
I'm sorry?
do you mean like how much of our credit card balances we've had to write off?
No, and possibly this might, but I'm surprised that banks don't have this information if they're using credit cards or trying to advocate the usage of credit cards. What has happened with businesses with bad debts? Traditionally, businesses write off a certain amount of bad debt every year, either a percentage. And has that changed? Has it gotten better? Has it gotten worse since the advent of credit cards, and how that's changed as credit card usage? I think you should know where I'm going with this. And do you have a breakdown of the credit card profit versus the percentage of profits in your banks, in each individual bank? I kind of like to know just how important is this part of the business to your banking? So, and I'd really like to have that answer too. And then finally, and this one might be a little bit tougher, you asked about, or you talked about the 17% interest rate. How many people don't qualify for the lower rate if they ask for a lower rate? Can you give me some, Mr. Kitcher?
Difference whether you, from a qualification criteria, whether you get the standard rate or the low rate, is just a choice and a fee for service.
It's the features you get from it. I mean, I don't want these features, but I like those, so I'll pay the different rate. It's not that people are disqualified from the low rate accounts. They can get them.
And then, I have a quick one after that. But if you had a balance of $5,000 and if you paid off $4,900 by the due date, what amount of interest, or what would the interest apply to?
It would depend on whether you were, there's two types of customers, whether you're using the card for payment and you're paying off your balance every month, in which case we're loaning money for 51 days, or whether you're a borrower. And if you're a borrower, just like any other credit product, you're going to pay interest on the entire amount on the date that you borrow it. So if you made the purchase on the 15th of the month, you'd pay interest on that full amount until it was paid off.
Okay, thank you. That's all, Mr. Chair.
Thank you very much, Mr. Van Kesteren. We'll now go to the next 5-minute round is Mr. McTagg, who is making his way back to the table as we speak.
Thank you, Chair. And I'm glad that I got that opportunity, and I thank you for that wonderful introduction. Ms. Hughes Anthony, thank you again. After 15, 16 years, I'm still up doing the same thing I've been doing. I haven't been able to shift gears, so I'm going to stick on something that works, competition. You mentioned competition in the debit and in the advance down the road possibility of greater competition for consumers. We have heard, and I think most of the colleagues here from the banks have Visa as their issuer. I think every one of you do. Well, you might have one that's MasterCard there. So let's say the majority here, for the purposes of the question, Visa has told us that they're interested in a flat fee or perhaps going to a percentage fee, making it more expensive, obviously, for merchants. If the model is the same that is used in the United States, and we know that debit fees down there are much higher than they are currently with interchange, how does competition, in the way you see it, knowing how practical that proposal is and how it's implemented in the United States, how does higher prices constitute better competition? How do we sell that to consumers?
Well, I can answer it from a merchant standpoint. There's more competition. Merchant right now have one choice, Interact, and we have concerns with it because we've been declining in market share. And the ultimate control over the pricing is that merchants decide whether they're going to accept Visa debit, whether they're going to accept MasterCard debit, and whether they're going to accept Interact. And when they're competing, you're going to make sure that the prices stay intact.
Let me ask you, with credit card, with Visa and MasterCard constituting 94% of all the action from a credit perspective, given the advent of chip technology, if in fact you're able to offer the same inducements on debit that Visa and MasterCard are proposing to do with higher rates, as Visa is certainly proposing to do, what options do merchants actually have? I mean, you're presenting this as if there's competition, when in reality there's very little competition to begin with. I think we're seeing this thing from a very different perspective, but I'm trying to get from all of you here an understanding of how you think there's going to be more competition when, in fact, the proposals that are going to be made, certainly on the side of debit, will actually mean higher fees for merchants and ostensibly higher fees for consumers who are simply going to be asked to have their bank accounts opened within a microsecond and closed. It doesn't cost very much to do this. Competition in this case looks like it's going to cost a lot more money, not less.
Issues that we're confusing here. So one
I'm not
is
confusing the issue at all.
So one is competition. The other is interchange on debit. Canada is one of the only countries in the world without interchange on debit, and I agree. Any interchange is going to be higher. But the no interchange model is not sustainable for Interact or any other competitor.
Well, I guess I come from a different school. It says if it ain't fixed, if it ain't broken, don't fix it.
It is broken. It is broken.
Well, it's broken from the perspective of a consumer and a merchant. It's certainly broken because what's being proposed are higher prices. But let me ask you a simple question. Earlier, you had commented to my colleague, Siobhan Cody, about the question of fraud and that how fraud was on the increase. The Canadian Bankers Association website, to my knowledge, suggests that fraud, in fact, from your bank, RBC, is down. Can you reconcile the
I can answer for credit card fraud is up. It has been growing every year.
And debit fraud?
Debit card, I'm not sure on the debit card in Canada, for RBC in Canada.
It seems to me that we have to be very careful, I think, as a committee to ensure that we're not asking something that is going to cost some groups a lot more and volunteer someone else's money in order to pay for these new wonderful procedures, which may be legitimate in some cases and may be somewhat dubious in others. Let me shift to the issue that we began with on the question, thank you, Chair, on the question of debit. You're admitting that there will be an increase for consumers under the new guise of competition, which, Nancy, I think you had mentioned a little earlier. If that is the case, let me go back to the beginning of this question. How do we justify to Canadians, without regulatory involvement? How do we justify saying the great new wonderful world means you're going to have to pay more for your services? Other people may be able to get advantage with certain rewards as a result of that, but how do we justify that to merchants and consumers? Are we supposed to stand here and say that's the real world, that's the way it is outside of Canada? I would rather think that we have a great system here, as Mr. Rhoda has suggested.
Consumers aren't going to pay anything more.
I think. Yeah, I'm sorry. I think, Mr. McTeague, you may be jumping to some conclusions in a little preliminary manner, but could I ask Mr. Kitchen to have a few words here?
Yeah, I mean, I understand that today, I mean, Maestro, MasterCard's PIN-based offering is out in marketplace, and it is actually priced below what Interact is charging. So we're already seeing a case where a new competitor's entered the market, and they have offered a fixed fee per transaction. They're not doing percentage of purchase value, and the price is actually lower to those merchants who want to sign up.
And consumers?
There is no price differential to the consumer at all in that particular case.
Okay. Thank you. Thank you. We'll go to Mr. Lake, please.
Yeah, thank you, Mr. Chair. Finding this whole study to be quite a communications exercise. I know that Mr. Wallace holds this brochure up here and reads off a whole bunch of legal mumbo jumbo and gets an answer in about 8 words what it actually means, the stuff that he read. And then I note that, you know, we get these simple charts from almost everybody that appears before us, and it's taken us 4 meetings so far, and we still don't know where all the arrows really are on these charts. So quite an exercise in communication. But I want to question for the CBA. I want to follow up a little bit, if I could, on Mr. Menzies' line of questioning. I note that when I read the document that you handed us here, in the second paragraph, it says, we provide, talking about the CBA, we provide a forum for discussion on issues of common interest to our members, and we advocate for sound policies for banks at the municipal, provincial, and federal government levels. Now, I'm wondering, do you communicate with the banks when you do that?
Of course, and when I say we, I mean we are our members, Mr. Lake. I mean, the CBA staff doesn't make these things up. We have a variety of committees and different processes, and it's really the members that make these policies.
So do you ever get together in a room with your members, with banks, to discuss the issues of common concern to the industry?
Of course we do, and in those discussions there are a wide variety of things that we can discuss that are common to us, including things like standards and exchange of information. As I mentioned, we must make sure that we are compliant with the Competition Act. That's obviously the same issue any industry association would have.
But you do meet to have discussions about areas of common concern. Of course we do, yes. And you don't consider that collusion?
Well, no. And as I said, we guide ourselves by the letter of the law of the Act to make sure that we don't cross any of those boundaries.
Would you consider the concerns raised by merchants and consumers, our constituents, your customers, would you consider those areas of common concern to the industry?
Of course they are. And we've had many discussions about the things that we think we can do better, and some of those are obviously in our brief today. Areas around disclosure, for example, are absolutely areas that can be improved and do not represent any kind of problem in terms of a basis of our discussion. And so we certainly are willing to entertain those kinds of discussions. As I said, we can't go into areas that relate to anything to do with pricing or anything to do with the quality or quantity of a product or service.
Yeah.
So that's where the line has to be drawn.
I'll just make a point, though, that if you could get together and make this clear to me in a lot less words and clear language, I won't be calling for the Competition Bureau to investigate you, I promise.
No, I think point taken. The whole area of disclosure, and if anything, this whole dialogue that your committee has facilitated has raised a lot of those concerns, and we've had a number of meetings of bank representatives where we've looked at our own material and said, boy, this is something that can be improved.
The FCAC came to us over a year ago to simplify the application form. They worked with MasterCard and the CBA, and we've been working on that. So that's a great example.
Fair enough. And I just want to turn my attention just quickly to this issue of the merchants and the fees. I've heard not just your organizations, but several organizations during these hearings talk about the concerns raised by the merchants and defend those concerns by saying but it's good for the merchants. These are good, the merchants benefit from this. Shouldn't the merchants make that decision? Doesn't that seem to be fair that the merchants should be the ones that, I mean, if they're saying, we don't like this, and you're telling us, oh, it's good for them, I mean, you're not...
No, I think our view would be more balanced, Mr. Lake. In other words, you can't forget the benefits. You can't forget the benefits, would be our point, that there has to be a balanced viewpoint. I mean, for example, you know, we say, well, you can obviously, to a merchant concern, perhaps you can just offer transacting in cash, and they say, oh no, we can't, you know, that is just not feasible.
I've got about 30 seconds left. I guess to that point, if I could, the point is, I think from what we've heard so far, one of the things that we've learned is that this program, the way it's set up, certainly benefits the banks, certainly benefits the credit card companies, certainly benefits the acquirers, certainly benefits the consumers who are receiving the cards, but to the detriment, for sure, of the merchants. That's what they've expressed to us, and also potentially to the detriment of any of the consumers who don't particularly use those cards and wind up having to pay indirectly for the costs of those cards.
Ms. Hughes Anthony, a very brief response.
I think we would certainly disagree, Mr. Lake, that merchants have a very significant benefit from using credit cards, and I think if you talk to them, they would understand that. At the moment, they obviously have concerns specifically around both confusion, I think justifiably confusion about, you know, new kinds of rates, and also costs at a time where their bottom lines are very much in difficulty, and we have sympathy for that.
Thank you. We'll go now to Mr. Thibault, please.
Mr. Chair, I believe it's Mr. Kitchen from BMO. I just wanted to follow up. You were talking about the Maestro card and the interchange rates that Mr. McTagg was asking. Now, you're saying that it's cheaper right now? The rates are cheaper for Maestro than...
That was certainly the testimony of MasterCard. I mean, it's so small in Canada. There's not enough merchants for us to look at, but my understanding in that testimony indicated that the pricing right now for Maestro is cheaper than that of Interac. I know nothing else.
Sure. Okay. And in situations like that, for how long can that rate stay? That's the point, right? Like with credit card interest rates, it could be 1.9%. It's those introductory offers. And then 6 months down the road, you're at 10%, 11%, or 18%. So there's nothing there that's regulating what MasterCard can do 6 months from now, a year from now, in terms of where they want to bring these rates to. This could be an introductory rate and get people used to it. Do you think that's a fair opinion?
I think you would have to. I think you'd have to address that with them. I'm not qualified to comment on what their actions are. That would be inconsistent with their actions, and also the merchants are setting up contracts. The acquirers are setting up contracts with the merchants, so they wouldn't likely set it up in that fashion, and I think they could provide you some clarity on the nature of their contracts.
Fair enough. Thank you. I'd like to open this up to anyone who wants to take it. Can you explain why banks, credit card companies, are able to benefit from the incentives advertised offered to consumers, so insurance payback, products, etc., and yet they don't have to finance any of those incentives, as the credit card processing and merchants are ultimately the ones that are left holding the bag on that, so to speak. Can people comment on that?
I'm not sure I understand the question.
Well, right now you have all of these cards out there, premium cards or incentive cards out there, and ultimately it's the merchants and then the fees that they have to charge to the consumers who are actually having to pay for the incentives that you get when you get one of those cards. And so I'd like to hear your comments as to how is it fair that it's being offered by, and I don't want to single out anyone, but I can think of the Avion commercial just because I think it's quite funny, and then you've got the Scotia one. Those are advertising, I know, but just comment as to why is it fair to put those costs onto the merchants and consumers when it's being put forward by credit card companies?
Maybe I can take a first stab, and I know that I think some of our members would like to comment on that. First of all, I guess I'd make 2 points. One is there's a mix of costs and benefits across the system. I think, as Ms. Hughes Anthony said right in the opening comments, there are, whether it's banks, individual customers, merchants, each have costs. and each have benefits. And the merchants, yes, they pay the interchange, but they certainly have a range of benefits that they get from that. They don't have to carry cash. They get security of payment, immediate security of payment. They don't have to set up their own credit adjudication system. It's all done for them. And they get online payments and they get increased spend. So there's a mix there. Now, in terms of, the presentation that, the costs are all on one side, the benefits the other, if you look at what the banks have to do, the banks have to fund all the costs of issuing the cards. They have to fund the cost of the systems, the interface with the network. They take care of all the fraud costs, and last year that was $500 million, and that's going up. They take care of the costs of the security system to enhance that. They have to take care of the costs of loan losses, and the results of the banks are just coming out, and they're in some cases.
I understand that, what you're saying.
But all that has to be taken into account.
1 minute, Mr. Thibault.
Okay.
So but that's not getting me the camera that I'm going to get with my points, right? And that is being paid.
They have to take care. Well, they have to fund those as well.
Okay. If I have 1 minute, then I'm just going to jump very quickly.
Okay.
Thank you for that. Ms. Goulart or Mr. Wallen, we hear a lot from the banks in relation to interest rates and merchant fees. Are these same issues, are you hearing those same issues from the credit union side? Are these concerns coming to you from your customers and your cardholders as well?
Well, certainly in terms of our concerns we're much more active on the debit card side and on the Interac side, and some things we're just talking about in terms of fees. It's credit unions themselves pay for those rates in terms of offering those types of services. So they do provide special features, buyer protection, and those are paid for by individual credit unions. We are hearing concerns from some credit unions primarily around making sure that their Interac services are going to be able to compete on a fair level playing ground. We are, say, primarily issuers of Interac services, and we want to make sure that we are Canadian only, and as is Interac, and we want to make sure that it remains a strong player in the services marketplace. One of the things we see in the move to chip cards, it's the move to chip cards where all those terminals get changed, and that introduces the opportunity for new applications to come into the marketplace. And we believe it's really important that Interac has the opportunity to participate with those new applications that are going to come into the marketplace on a fair and even playing field.
Okay, thank you. Thank you, Mr. Thibault. We'll go to Mr. McKay, please.
Thank you, Chair. And I wanted to follow up on that question with the credit unions because it's pretty obvious that there's a bit of predatory pricing going on here in the debit card market by Visa and MasterCard in order to be able to crack into the debit card market. And it's also pretty obvious that in the United States the costs are 3 times what we pay here. So to be specific, in order to at least give Interac a fighting chance, what would you like to see this committee recommend?
Certainly 2 specific things as we talked on our address, and one is that Interac does need to change its governance model. It needs, as a nonprofit association, it does not have the capability to develop new products and services, so it needs to move to a new type of model that would allow it to have the capital and revenue necessary to develop products and services and get them out in the market and compete more effectively. The second would be that review of the regulatory environment to make sure that Visa, MasterCard, Interac, any new payment scheme is playing on the same field and is subject to the same regulatory requirements.
So would that include the lifting of the consent order?
Yes.
Okay.
Or the change of the consent order based on the discussions that are already underway between Interac and companies.
Thank you.
Thank you very much. Just on that line, is it your understanding as well that and I appreciate your comment about the regulatory environment around the debit card issuance, because I'm concerned about the fact that I understand that the Visa MasterCard may be settled outside this country. Is it that your understanding as well, that the Bank of America, they settle through Bank of America? Is that your understanding?
Yes, in terms of making sure that all the, subject to the CPA rules, for example, yes, that would be my, one of the
Your
concerns.
recommendation would be to use the CPA rules for any any debit card provider in Canada?
Well, certainly the issue would be, let's review the regulatory environment and make sure that all the payment schemes are subject to the same level and same type of regulatory rules.
Okay. Following on that, how much time do I have left, sir?
Almost 3 minutes.
Oh, okay, lots of time. So I'll go to Mr. Rhoda in a few moments as well. Ms. Hughes-Anthony, you talked about kind of a misunderstanding or some confusion with the merchants around this whole issue of costs. I'm confused as to why it would be a misunderstanding. What they're saying, basically, what they're saying to the committee, is that with the change in interchange fees, with the change in the merchant fees, and with the introduction of these premium cards, their margins are being completely squeezed, that their costs have risen dramatically over the last couple of years. Would you care to comment?
Certainly. No, I think when I was mentioning confusion, Ms. Cody, I was mentioning the fact that I personally have seen a number of statements, billing statements that these merchants do receive, and I have to say they're very complex and they're very difficult to understand. And so I think perhaps one of the issues when we're talking about transparency and disclosure is, boy, let's try to make it a little easier for them. It's just that I think perhaps some of the other members here can comment. We don't seem to have the same, shall we say, numbers that the merchant community does with respect to the impact in particular of implementation of premium cards. And once again, I go back to something my colleague said previously. People might have in their wallets a gold card of some kind. It may not actually attract the additional interchange fee. It may not be a true premium card. So when we look at this whole premium card issue, as I said, we collectively have looked at the entire industry, and we think that represents about 9%. So it's not the same sort of number that we're dealing with the merchant community. I think perhaps, I don't know if others have other items to add to that, but we don't have the same statistics, shall we say.
And we've been given, I guess, clarity around that issue from some of the merchants that showed us their actual statements that showed this increase in cost. It's kind of a perfect storm. You led off your comments today with the banking community has learned a lot about this introduction of the premium cards, the cost to consumers and the cost to merchants. So I'll leave it at that. I know Mr. Anthony has some.
She's Mrs. Anthony.
Mr. Rhoda.
15 seconds, but there will be time for another round if you want.
Oh, I've got one question. Okay.
5 seconds question.
Okay. You know what? I'll wait till the next round. It's a lengthy question, and we'll be.
You will have time for another round. So yeah. Okay. Thank you. We'll go now to Monsieur Carrier, s'il vous plaît.
Merci, Monsieur le Président.
Thank you, Mr. Chair. Good afternoon, ladies and gentlemen. Before I forget, I wanted to congratulate the Bankers Association for their fine presentation. I think it was a very professional job, and I just wanted to make that point. And it's in both official languages and very well written. So I'll go now to my questions. I don't want to have an answer here because it might take up too much of my time, but I would like to know, since you're on the credit card market, that's why you're here, you must get some profit from that. So I would like to know the share of each bank, the percentage of profits that you get from credit cards, your credit card operations, of the total operations. What percentage do credit cards represent of your profits? And I would like a detailed answer for each bank. Since you represent the Canadian Bankers Association, we could perhaps get that later on. I think this question was in Mr. Van Kester's list as well. And perhaps we need to consult about that, because I don't think it's possible to give you the statistics because the banks don't report their results on that basis. But I just make that comment, and we will get in touch with our members and see what we can do. And if we can't, we'll tell you why not. Well, the important thing for us is to have an idea of how much it represents for you. Now, for the Credit Union Central of Canada, I have the same question. Earlier, you mentioned that you represent the Desjardins movement as well in Quebec for the Caisse de Crédit. Do you represent the Caisse? No, we don't represent the Desjardins movement. We represent the credit unions outside of Quebec, as well as the Caisse Populaire in Ontario, the Alliance Caisse Populaire in Ontario. But can you give us the percentage of profits that come from the issuance of credit cards? It would be interesting for us to have that figure. Well, it'd be a bit difficult because although we are the Credit Union Central of Canada, the credit unions do not have to report to the central in the provinces. We don't issue the cards. They are issued by another entity. I see. I have got more information on the Desjardins movement in Quebec, for whom the issuance of credit cards is an important feature, but I accept your answer. That's all. I have some other questions now. On the presentation of the Canadian Bankers Association, you often talk about competition. You say it is important in your field, and that's the point you want to highlight. Perhaps as regards the possibility of regulation in the credit card field. But I think that the competition we have at the moment, when the costs are passed on to people who really don't have any responsibility. We're talking about the retailer. That's been mentioned a number of times. There is a coalition of retailers that represent some 250,000 businesses in Canada. These are people who are complaining that these interchange fees are being passed on to them and that they're higher than was expected. So you're doing things to increase the number of people using credit cards. That's competition. But the cost is being passed on to people who did not make this decision. So, assuming there were regulations regarding the interchange fee, do you not think that there could still be competition because there are interest rates that are charged on the unpaid balances, and it's like all other bank operations. You have other areas of activity than credit cards. You've got mortgage loans, personal loans, and so on. There is competition among the banks in this regard. So would you like to comment on this? Just to clarify, the CBA represent 17 companies that issue credit cards, including some that are here at the table, but also some companies where it is really their only business line. I'm thinking, for example, of a company like the MBNA, for example. So just to tell you, that's not a business model that applies to everyone, and it's very important to emphasize that.
Colleague, where we have seen regulation of interchange fees, the only one that has really, we have a proven example is in Australia. And I know the chair is
we're well over time here. I'm sorry, and I have members who still want to ask
questions. I think our conclusion of that is that was not an experience that was a benefit to consumers.
Thank you. Merci. If there's anything further you want to submit to the committee, you can always do so in writing after the meeting. I have Mr. Chong on the list for 5 minutes.
Thank you, Mr. Chair. I believe in competition. And my view is that the role of government is to regulate the marketplace in such a way so as to ensure sufficient competition so that the invisible hand can then set the appropriate price. What would you, the bank issuers, say to the following two-part proposal? First, the government does not cap interchange rates, but rather allows the bank issuers, yourselves, to set your own interchange rates by forbidding Visa and MasterCard from setting those rates. In other words, you could set those rates at 1.2%, 1.5%, 2%, 10%, whatever you wish. And secondly, that the government mandate that the interchange rate be added on to the final bill of sale at the point of sale so that the consumer can make a choice between cash or credit. So, for example, if the consumer chooses credit, then that interchange rate is added on at that point to the bill of sale at the point of sale and itemized on the bill of sale so that the consumer can see what the rate is and what they've paid on the interchange, just like we do with the GST. This seems to me to be a way to empower the consumer to choose the credit card and the interchange rate that best fits their needs.
Okay.
I'll answer that. So, first of all, interchange rates are a charge to the merchant, not to the consumer, to the merchant for the benefits that they receive.
I'm suggesting that we change that. I'm suggesting a potential solution is to change that and to charge it to the consumer rather than to the merchant. So the consumer is asked cash or credit at the till. The consumer says cash, they don't pay the interchange. They say credit, boom, you get added on the interchange of whatever bank issuer of whatever credit card they are using. It's itemized on the final bill of sale at the point of sale, just like the provincial sales tax and the GST is, thereby empowering the consumer to choose the credit card and interchange rate that best fits their needs.
Okay, so a couple of things. If you allowed each bank to set the interchange, the first problem is that payment cards are not a Canadian phenomenon. So we have to allow those cards to be used everywhere else in the world. And those merchants need to know what the rates are. So allowing me to say, okay, it's going to be 2% and CIBC going to be 6%.
With all due respect, we've just gone from, I think, 2 interchange rates to a plethora. Obviously, the computer systems and the wherewithal to handle that kind of complexity exists.
No, but the problem is for the merchant. I don't think the merchant would want that because the merchant will not know whether I'm coming in with my Visa card has a different rate than her coming in with her Visa card.
The merchant doesn't care because the merchant's not paying the discount. The merchant's not paying the interchange rate. The merchant will be paying a separate fee to the acquirer for the service that the acquirer pays, but it's simply a fee added to the bill that the consumer would pay, pass through the acquirer onto the issuing bank.
But the interchange rate, by definition, is the cost to the merchants for their benefits that they derive out of the payment service.
I understand. As it
so
present.
it doesn't make sense.
Thank you.
Anyone else would like to respond?
You know, you have that in existence somewhat today because merchants can offer a discount for cash. And that ultimately is really the biggest break on excessive interchange rates, I think. If all of a sudden MasterCard or Visa tomorrow would want to charge 10% interchange, you know, I think you'd quickly see merchants offering significant discounts for cash payments. So the model you're describing is surcharging, and that could also work as the flip side of a discount for cash. And merchants can compete on whether or not to, you know, absorb the cost of interchange as they absorb the cost of free shipping or other, you know, features they offer their customers. But I think you're on the right path when you say let the market be transparent, let it compete.
Is a cheaper or more value for the merchant? That's not necessarily so. Cash is can be an expensive thing for a merchant to handle. So it's in this case, if you're incenting consumer behavior that says I'm going to pay cash because it's cheaper to do that, it could actually increase costs.
But clearly, also credit cards are also, in the views of the Retail Council and other retailers, also expensive for them to also process. But I understand the bleed from the till and fraud and the like and theft at the till in terms of cash. Well, thank you very much.
Thank you, Mr. Chong. We'll go now to Mr. Rhoda, please.
Thank you, Mr. Chair. I'd like to shift over to debit and maybe spend a little bit of time on that regarding priority routing. And have you been asked, and this is for the banks, I guess, more than the association, have you been asked or have you signed agreements to ensure priority routing for Visa or MasterCard? And I understand, and I'll just open it up if anyone's been asked to get on board and how that helps or how that doesn't help.
The question being a Maestro issuer. We've been a Maestro issuer, just for the record, for north of 15 years because we think it makes a ton of sense to allow our debit consumers to be able to use their debit card around the world. So we've had Maestro in place all along. So as Maestro started to enter into Canada, even on a limited basis, what priority routing does is it allows the determination of if 2 networks are available to make the purchase, which network is provided. And, you know, we have made agreements relative to we want to be able to pick the low-cost alternative. and as a result, we can elect to priority route our customers. And we think that makes a lot of sense because we're worried about the alternative, that if you ask a customer to choose between do you want to go to Interac or to Maestro, what will happen in the marketplace over time is we'll start competing to win that customer's choice. And for all of your concerns around the merchant today, those convincing the consumer to choose will start to enter more costs into the system, and we think the priority routing keeps it in a lower cost model.
So just to clarify, and I like what I heard there, is the lower cost will automatically be chosen.
Because there's a number of parties in the system, the merchant makes their decision whether they want to accept each of those network providers.
So if there are two, and does the machine look at the two rates and decide on the lowest one, or is it just whichever one the agreement is with?
It's whichever one the agreement's with a particular issuer.
So there's no real saving there.
The merchant decides who. The merchant decides whether they want to participate at all.
I understand that.
And then it's a decision made on the person who has the relationship with the cardholder who makes the decision on which network it goes through. Because it's our card that's being in use, and it's our customer who's using the card, and there's costs passed along to us as well.
Okay. Mr. Wheeler?
Unions tend to have very different business models for how they deliver, let's say, an Interac service versus a Maestro service, and there are very different cost structures associated with those two deliveries. So the credit union, as a card issuer, really needs to be able to set, where that's coming, which channel that would come down, because the costs need to be reflected in that. We are concerned making sure that that's on the merchant side, that's a fair play, that is a fair and level playing field in terms of making sure that, say, undue pressure isn't brought to bear to limit the opportunities and options out there.
Okay, thank you, Darren. I'll shift over to liability. I know with the new chip cards that are coming out, and I've heard conflicting stories on the chip cards. The big concern is the shifting of liability. My understanding, maybe correct me if I'm wrong, but my understanding is with the new chip card, it'll be a safer system. It'll be safer for the users, as well as the merchants, as well as the banks. And the liability is shifting from the banks to the individuals, or is it just to the individuals who don't change over to the chip? So if they don't shift over by, is it 2000 or 2010, 2011? But the question I have there is the cost for the equipment. For those who are leasing, I understand it's just a matter of shifting the lease. Is the lease rate going to remain the same, more or less? Is it going to be something much more expensive? And on the corporations, I guess this would apply mainly to the larger merchants who have their own equipment. Is there anything built in there so that they can acquire new equipment, or do they have to buy all new equipment and bear all the cost themselves?
Okay, just a brief response, please. Mr. Campbell?
Say there, that's primarily a question for the acquirers. I know you had them here the other day because they're the ones who put the machines on the desk. But the basic thing is it is more secure, and it really is the consumer and the consumer's interest, and it's very traumatic to have your card compromised, and this will take care of that. This has been underway for a long period of time, and there is going to be an end date. And when the shift over, when the shift over is to the new system on chip, there is no shifting of liability. The banks will still have that burden of liability, but it should be a much better system all around because of that chip.
Okay.
Well,
okay.
as you
sorry.
Well, as you say, when you're renting it or leasing it, there's no cost to that merchant.
Okay, thank you. We'll go to Mr. Deckard, please.
Thank you, Mr. Chair. Ms. Hughes-Anthony, you mentioned in your presentation that approximately 70% of Canadians pay off their credit card balances every month. And by contrast, in the U.S., it's only about 50%, and the same in Australia and 56% in the U.K. And you also mentioned in your materials that the delinquency rate in the U.S. is much higher than in Canada. So can you tell us how credit card interest rates on Canadian cards compare with those in the U.S., U.K., and Australia, given those circumstances and facts?
May I ask Terry to do that one? Sure.
Okay, I would say there's two things. First of all, when you're comparing rates, the key point is precisely the point that you raised. For 70% of Canadians, the effective rate is zero. Right. For Americans, that's a much smaller rate. To do a real kind of card-by-card comparison, you have to look across the board. And of course, interest rates tend to be affected by the local economic conditions, inflation rates, the strength of the economy, and so on. So you'd have to look at the low-rate cards, the premium cards, the standard cards. I think Canada compares very, very well. If you look at fees, and certainly compare to the United States, our closest competitor, we have fewer fees and we have lower fees.
But in terms of interest rates, can we do some analysis of the range of interest rates that consumers pay in the U.S. on credit cards versus Canada? One would expect that, given the more favorable situation in Canada, that their interest rates would be somewhat lower.
We can do a comparison, but again, you have to bear in mind there are very, very different markets, and in with U.S. cards, you've got, yes, you have an interest rate, but you've got a whole bunch of other fees that you would not find here.
Okay, understood. I have one other question for you. I know time is tight. Can you explain to us how banks arrive at a, say, 19% or higher interest rate on credit cards at a time when interest rates are at historic lows in terms of prime rates? And what is the average effective yield on rates for credit card interest to banks?
I mean, once again, I think I explained earlier, very often people do misunderstand the issue about the relationship to the Bank of Canada.
I understand. I understand that point.
I think we can set that one aside.
How do you get to 19%?
I think that once again there are cards that are prime plus, very low end of the market. There are cards that go up to higher rates. I don't know if any of our colleagues, Jim, do you want to take that one?
This is a difficult thing to try to understand, and what happens is a comparison is drawn between the Bank of Canada rate and the 19%, and you go, wow, I mean, that's much too much. What's really driving it in there is the biggest cost in there is the cost of credit losses. That is a bigger cost component than, in fact, the cost of funds to supply the credit.
So that effectively reduces your yield.
Your yield. So if you did some rough math very quickly, 70% of customers pay the balance every month. 30% don't.
That reduces your yield.
That reduces your yield. Now, one way to think of that is, the industry statistics for the last quarter would suggest that loss rates in Canada are running at about 4.5% on credit cards, right? But that's across the whole population of 100%. Those 70% who pay off every month, you can't rightly attribute any losses of that population.
Right.
It's the 30 that don't, right? So if you eat that 4.5 divided by 0.3, all of a sudden the attributable loss rate to that 30% of the population is in the 14% range.
Okay, great.
So now you've got 19% less 14%, less the cost of funds, another 4 percentage points. Pretty soon you're down to a margin of 1 or 2% plus interchange.
So can you say that that's a kind of average yield rate that banks earn on
in today's market with today's loss rates, that's a pretty credible example, I think.
I would think if you could demonstrate that might be helpful to consumers.
Okay. Thank you, Mr. Deckert. Thank you all for coming in. I just wanted to clarify, and I've been asked, I know you'll be responding to Mr. Rhoda's question. Also, I've been asked by Mr. Lake if we can get information on all of your low-interest cards, your list of your low-interest cards, including the rates and the qualifying conditions, if we could have that submitted to the clerk of the committee for members' information. I did want to just clarify 2 points, and I think I know the answers, but in terms of who proposed to first introduce premium cards, was it the credit card issuers or was it the credit card companies? Or was it the card issuers or the credit card companies?
It was the card companies. They designed it, I think I'm right. It was the card companies, yeah.
And the second one, the clarification is how much of the interchange rate goes back to the credit card companies? Visa did give us an answer a couple of weeks ago, but if we can just get a response on that. Ms. Hughes Anthony.
Well, let us perhaps take that away in the interest of time and get back to you on that point.
Okay, thank you. Monsieur Carré?
Oui, dans la liste.
Point of order.
Oui, dans la liste d'informations, dans la liste.
In the list of items that you mentioned, there's also the percentage of profits made on the issuance of credit cards for each of the banks. I asked that earlier.
That was Mr. Carrier's question as well as Mr. Van Kestren's. Mr. McTagg on a
just for
point.
clarification, I just wanted to, through you, Chair, determine whether we can receive, if it's at all possible, one way or another, the fees received from acquirers versus the fees the banks get from acquirers. I'm not sure that was made clear. If I'm mistaken, I apologize, but if that is at all possible, a request through you, Chair, if possible.
The fees received by the banks
Acquirers.
from acquirers
No, from acquirers to the banks.
From acquirers to
Those
the
fees
banks.
would be. Chair, do you want me to respond?
Well, there's,
No.
yeah, we're.
No, Chair, I think the record will show that in one of the responses, I believe it was you, Ms. Hughes Anthony, that you said banks receive a fee from acquirers. Did you say that? Was I mistaken?
It's not. Pardon me. If it's not the case, Mr. McTeague. So if I did say it was an error, and I apologize for that.
Thank you, Chair.
Okay.
Thank you.
Thank you. Thank you all for coming in. Thank you for your presentations and your responses to our questions today. Meeting adjourned.